Hello traders, my name is Tomasz Wiśniewski. I'm a Chief Analyst in Alpari Research and Analysis, and this is Daily Analytical Report with Alpari. From the fundamental point of view, it's a calm day. We're still digesting. On the currency market, we're digesting the situation from Tuesday when we find out about the earlier elections, general elections in UK. We also had a sharp drop on oil, which was a result of data from crude oil inventories. Well, data from oil did not disappoint. But when looked closer on this, we got a number from US gasoline inventories, which came much lower, higher than expected. We got a build, right? So the inventories were higher, which means that the demand is lower and the supply is higher. And this caused a huge decline on the oil, which, by the way, I will obviously show you when we'll take a look on the charts. We broke most of the actually all of the major supports, and now oil is going a little bit higher, all due to the OPEC talks. After this drop, they are making kind of a verbal intervention, which we always, when we analyze oil, we are mentioning that OPEC will do all they can verbally to leave the price of the oil, and that's how they try to stop this downswing. But hard macro data is very hard to discuss with, and you cannot really discuss with that. You should, at least you shouldn't. You see that traders, they may use that OPEC talk for take profit action, take profits from the downswing, but it should not change the trend, especially that the recent upswing was driven by those expectations from the OPEC side. But even if they will commit to the extension of the agreement, well, we have non-OPEC countries which are increasing the production. Global demand is not so bright, not so big as it's supposed to be after this excellent macro data about GDP in many economies going higher, etc. Global demand for oil is not so big. We have loads of oil producers which were suffering heavy losses for the last few years. So they use every single upswing in the price to sell more oil to help their budget. So in case that some of the countries are committed to the cuts, other countries will increase production. Like, for example, Brazil. Brazil said that they won't commit to those cuts from the OPEC side because they have problems with their economy, and they just have to sell as much oil as they can, right? Simple as that. From the calendar point of view, what do we have? Here is a speech from Mark Carney. He's the Bank of England governor. And also a speech from Treasury Secretary, Mr. Mnuchin. He mentioned a few times about American dollar being too strong, so I'm wondering if he's gonna tell that again. Many market participants, experts, etc., they are talking a lot about French elections. I absolutely don't see a point in that. It's a good topic from the news point of view regarding politics. It's a hot topic because we have Marine Le Pen, which is anti-immigrant politics, so it's always good to write about her. other far-right candidates, far-left candidates. So this general elections in France is a good topic for the journalists, but in my opinion, for the markets do not care. It is always like that the market need to have a topic, need to have a headline to talk about. And as we don't have any serious one, like for example interest rate rises in United States, Greece, Deutsche Bank, etc., we're talking about French elections, but they should not be very influential for euro, for example, or for global stocks. But anyway, those elections will start. I think it's Saturday or Friday, even Friday, and it will last few days. So yes, everybody's talking about French elections, but in my opinion, that's just excuses for the movements, for typical technical movements, right? Price needs to go down, needs to go up. There's a trend. Somebody's taking profit. Somebody's opening new positions. There's a, as I said, trend correction, etc. More people are buying, selling, just pure market mechanics. And you cannot explain every single movement with geopolitics or with a fundamental side of the market. You just cannot, because it's not like that the market is following purely the fundamentals. It's just the market mechanics. It's some of the guys are selling, some of the guys are taking profits, etc., etc. So don't get too excited about explaining every single movement on the market with situation on in macroeconomy or with data or with geopolitics. It does not work like that. So let me show you the charts. Maybe yes, let's start with this oil thing. So we do have our oil, WTI. I don't show all. As you can see, before that data, that gasoline data from US, everything was going great. The price was heading higher, even that they broke the uptrend line. This uptrend line was very sharp, so it was normal that they're gonna break it anyway. But the price was in a flag. Flag is a trend continuation pattern, so we could expect a bounce here. They were above horizontal support here on $52 for 52, 51.9, $51.85 per barrel. And as long as we stayed above this support, the sentiment was positive. And as you can see, something snapped after the data. We got a huge decline, and we got a small bounce on this support. And after it was it was broken. You can see that the movement accelerated, and it's not like many people suddenly started to sell oil. No, but those buyers here that were buying oil with that price were placing their stop loss orders below this horizontal support. Stop loss order for a long position is a short position, right? So those orders accelerated the movement, and that's why we had a sharp drop. And now we're not having a retracement, we're just having a typical correction. It's a very small, it's a tiny flag, fully controlled by sellers. The most probable scenario is the price breaking the lower line of the flag. But even if it won't happen today, as long as the price stays below this 51.8 resistance, the sentiment stays negative, right? So this is like our benchmark for the market sentiment. If the price goes above this, it's a positive sentiment. If the price stays below this level, the sentiment is negative, right? That's, in my opinion, situation on oil, and you know that our long-term view on oil is negative. S&P 500 and DAX, interesting situation here, because those corrections on S&P 500 started in March, and DAX it's started in April. Those corrections are taking time, right? Usually when you look on previous price movements, you had corrections for a few days, then upswing, few days, upswing, few days, upswing. Now we're having a correction which lasted almost for 2 months on S&P 500. Maybe it's not deep, but it's long, right? Sentiment is still mixed, as we said yesterday, because we have bearish signals, like the bearish signal is a breakout of the midterm trend line. But we have two bullish signals here, which first one is that the price is still above this horizontal support here, 2323, 2232 points, 2323 points, right? And is inside of a wedge labeled here, highlighted here with a blue color, which is a trend continuation pattern, so trend should continue. But so far, as long as we are inside of the wedge, the sell signal is on. Well, maybe not sell signal is on, but there is no buy signal here. A buy signal will be created once we will break the upper line of this wedge formation, which so far is not happening, and the chances for that are not so high, especially that this upswing from a few days ago, from 17th of April, is not used for a continuation, right? It was a nice upswing, but it's not used for further continuation. On DAX, what do we have on DAX? Well, today we had new lows of the recent sentiment. We had new April lows, and here signals are also mixed. So we broke the midterm trend line as well, right, which is a negative sign. We also broke here a horizontal support here on 12,048, but in the same time there are two bullish signs, which is flag formation, so wedge on S&P 500 and a flag on DAX, which are trend continuation patterns, and that the price is above important horizontal support on 11,900 points. So it's not a good environment for the trend traders, for the price action traders, because the situation here is not so clear as it likes to be when you trade with price action. So for me, the situation is not tradable. Here I am waiting. I'm waiting here for either a bullish breakout of the upper line of the flag, which would create positive sentiment, or a breakout of this horizontal support here. Okay, that was oil, that were indexes. Let me show you now the currencies. We start with euro dollar. Euro dollar, after this bounce from the lower line of the wedge formation, is heading higher. Today we just got monthly highs. We are on the highest levels since the beginning of October, beginning of February, I'm sorry. And in my opinion, we should get here very soon. Why here? Because here we do have important resistance. As you can see here, it was a support in March, and in October, after the breakout, it was a resistance. In December and February, it was a resistance also at the end of the March. And now we should get there. Why is that? Because just because of the inverted gravity, right? Buyers are supported with bounce from the lower line of the wedge. It's usually like that the price goes from support to a resistance. There is no resistance here. there is here, which is 70, 80 pips higher, and I think this buyers will take a chance to break it, right? If they will manage to break it, so the daily candlestick will close above the trend line and above the horizontal resistance here, that would create midterm buy signal on euro dollar. Okay, we will see if Mr. Mnuchin will say today anything about American dollar being too strong. But actually many experts, analysts are starting to doubt the recent path shown by Fed. Well, Fed is kind of independent, right? But if they won't be influenced by the comments from the Trump's administration, because Trump's administration is pushing against against higher rates. It's actually funny because I saw few interviews with Donald Trump when he wasn't the president, and he was talking that we shouldn't have so low rates, we should increase them, there is no point to keep them so low. And now when he took the office, he's more cautious with that. He's very afraid of a stronger dollar, so he's becoming a fan of lower interest rates in the same time. Cable after the subswing from 18th of April is having just a normal correction, typical correction. The price is not declining sharply, as you can see. They retraced 23.6. They did not retrace even 38.2. So everything is under control, under buyers. The place where we stopped is not a surprise. It was a support in July. It was a support after the breakout. It was a resistance in December. So that was pretty, maybe not obvious, but we had high chances that the price will stop here. But it's not a start of a reversal. It's more like a take profit action, and buyers are just getting ready for a further upswing, for another leg up. This is my view on cable. Euro to British pound is doing a very interesting maybe not pattern, but Euro to British pound is doing a typical thing for price action traders, which is a test of the recent support, crucial support as a closest resistance, right? So let me remind you, we broke the long-term uptrend line and the lower line of the symmetric triangle formation. We can say actually that we are having a support here. Right, so they went to the first local support, and now they will try to retrace this movement and test the recent supports as resistances. So we do have this one, horizontal one, we do have a lower line of the symmetric triangle, and we do have a trend line. I assume that if the price would go to the second, to the bigger yellow rectangle, that would be very nice. And if in this rectangle, around this rectangle, in the area of this rectangle, the price would create a head and shoulder formation, or a kind of an engulfing on higher time frames, etc. Any serious, I mean serious, not a hanging man, but serious reversal pattern, that would be more than welcomed by sellers. They would add to their short positions. Many sellers which were late for this initial movement would jump into the to this situation. So I think that if the price will get a little bit higher, that will be a great invitation for sellers. Obviously, if we will have a pattern which would prove that, because actually the price can make a V-shaped retracement and don't even bother to bounce here, just go up straight away. It's happening, it happens very often, right? So definitely we shouldn't be surprised if this kind of thing would happen. Euro to Japanese yen, beautiful retracement here, kind of a V-shaped retracement, right? Straight away the price retraced 260 pips without anything. Now they stopped, but again, is that a coincidence that they stopped here? No, it was a support almost whole April. First 2 weeks of April it was a great support, so now it's being challenged as the closest resistance. Also, it's a combination of two factors, so we have this horizontal resistance, but also a lower line of the flag formation. Action, typical and very similar to the seen on Euro to British Pound. So a breakout of important supports and then retest. Euro to Australian dollar, daily candlestick from yesterday. Okay. Daily candlestick from yesterday managed to close above the uptrend line, which triggers a buy signal here. It's dangerous because the price is still making lower highs and lower lows, so this pattern has not been changed. But we have other factors like denied head and shoulder formation, like comeback above crucial important support, breakout of a neckline, false breakout here. So we have additional signs that we can see an upswing from now on. Australian dollar to New Zealand dollar. Okay, we can move this line a little bit lower, that the flag will be created here. We bounced from a horizontal support here along with the lower line of the flag, but okay, this lower line of the flag was created just now. And no buy signal yet. Buy signal will be created once the price will touch this rectangle, because that will be a breakout of the upper line of the flag and this horizontal resistance here. So far, no interesting trading signal. American dollar to Swiss franc. After they bounce from the upper line of the flag, maybe it's not boring because the price is going down, so it's good for sellers. But in a long-term situation, it's not interesting because in the long-term situation, the setup here is rather long because of the ascending triangle formation and a flag, which is the trend continuation pattern. So we should see a breakout of the upper line of the flag. But as we are in the middle of the flag, exactly in the middle of the flag, it's not very interesting. Gold. Gold locked in a sideways trend today and actually yesterday. Yesterday we bounced from the trend line here. We bounced from the horizontal support. It was defended, so far so good. Silver is chatting above midterm uptrend line, which is not very good for the buyers. They should be extra careful in the next few days. American dollar to Polish zloty. A bit of a roller coaster recently. This daily chart. Dollar was weaker 2 days ago, stronger yesterday, and is weaker today. So it's kind of a stop loss crusher situation here. As long as we are above the trend line, it's positive. British pound to Canadian dollar. Here is one of our during 18th of April, when Theresa May announced that elections, and that was one of the best pair that gained after this decision. We still want to see the price here. Not that we have a position here, but it would just be a decent movement, right? We got a bullish engulfing here from the double bottom formation. The closest horizontal resistance is there, and it would be just nice if the price could get there. Maybe they can bounce from this level. I don't care, but technically I don't care what would happen later, but technically that would be great if the price would get here. Australian dollar to American dollar. This support, we have to adjust it, right? Because you see that it's no longer how it's supposed to be. So we shouldn't be bothered about this level or this level. We should be bothered about only the latest price swings. So even here, this will be the closest support. Let's remove this one. And yes, as long as we stay above this support, the sentiment is positive. Well, maybe neutral, but not negative. Once this support will be broken, the sentiment will be negative. New Zealand dollar to American dollar. After the bounce from a long-term important support, we are having a sideways trend, which is not bringing us a lot interesting here. American dollar to Japanese yen. I will use different background. That is very interesting. It shows how the American dollar is weak right now, because there was a flag in the long term and they're supposed to defend the lower line of the flag and start an upswing. But instead of that, the price making lower highs and lower lows, and actually they broke the lower line of the flag, which denies this flag and creates a bearish breakout and a bearish opportunity. In a shorter term, what do we have here was a try of inverse head and shoulder formation, and actually you can see that the lower line of the flag is in the same time a neckline, but it can be both. It can be inverted head and shoulder formation, but in the same time it can be a symmetric triangle, which hopefully you can see. So a breakout here will trigger a buy signal, a breakout here will trigger a sell signal. What price action traders do, just wait, eat popcorn, watch this pair carefully, watch the development of the situation here, and trade after the breakout. That's what price action traders do. There was an interesting setup yesterday. I said that this flag on Euro to New Zealand dollar looked interesting, and we got a breakout of the upper line of the flag. But after that, there was a strong resistance here, which was used for a bounce. So this can be a false breakout. This creates a chance for a false breakout. So far there's no buy signal here. There is midterm uptrend line. As long as we stay above this uptrend line, there's no sell signal, because there is no buy signal either. So the sentiment is neutral, but if this lower line will be broken, this pink line will be broken, that will create a sell signal on Euro to New Zealand dollar. Thank you very much, guys, for attending daily analytical report. I hope you enjoyed and saw a few interesting occasions. Obviously, you have to remember that trading and investment in financial markets involves an element of risk. Now we'll have a short break, and after that a webinar about technical analysis. I hope you all will attend this webinar, and tomorrow the same schedule, but we have a webinar about candlestick at price, right, which will be